But I said it's a great panel. We have a great mix of investors, entrepreneurs, and I'm amongst friends, so I'm not nervous. Normally, I'm very nervous before I do all this. But this is about reimagining entrepreneurship in a post-COVID scenario. Let me introduce the panel to our viewers. The last kind between Facebook, Twitter, uh, the Vertex platform. We had about 2,500 viewers for the last session that I was there. So it's a large audience, larger audience than we are able to get sometimes at a physical event. So there is a blessing in disguise there. It's also easy to get people from their busy schedules. This panel has uh, Ms. Monika Malhotra representing a second generation business. She has grown it. We have Mr. Vivek Tiwari, who is a first generation. He's built a medical supplies marketplace and raised money from marquee investors. At last count, he had raised 32 million or 40 million. I'm confused, but more than $30 million. And continues to raise more money. I'm aware that he's likely to raise more money. We have Mr. Mahendra, who worked in the corporate sector, but for the last 10 odd years has become a catalyst for supporting entrepreneurs and has started Venture Gurukool. We have Mr. Vikram Gupta of IvyCap Ventures, who's again been a very active investor, raised a fund, and made sure he nurtured entrepreneurs. Some of the bets he's taken have gone on to do very well. And he's also a proud IIT Delhi alumnus, and he's also contributed immensely to his alumnus, and he's very proud of that. We also have Mr. Aditya Prakash Gupta, who's partner in GEMS. And again, at last count, they'd invested in 14 companies. He is an entrepreneur. He sold his BPO business, made money, and now gives his wisdom and his capital to entrepreneurs. Welcome, Mr. Gupta. Last but not the least, we have Mr. Radhesh Kanumary, who has started Arka Venture Labs. And again, he worked in IBM. He was on the entrepreneurship and the fintech ecosystem. And he started this business-to-business focused fund, which invests in early stage business-to-business startups. So it's a great panel which invests. You have 3 investors, we have 2 entrepreneurs, and we have a venture nursery with a combination of being an accelerator and investor. So it's a fantastic panel. I'd like your opening comments, and let me start with Monika Malhotra. You're a traditional publishing business. MBD is it's the 50th year of MBD. Your father started it. You've been able to grow in many other businesses like hospitality. But what are you doing to reimagine your publishing business? Because education and edutech in the last 6 months has seen most money coming in. So what are you doing to become a new economy company from an old economy company? If at all there is an old and new division these days. There used to be at one point. So Monika?
Good afternoon, all of you. Annurag and the other panelists, we've been into traditional publishing past more than 60 years now. And regarding the digital, our foray into digital space have been since 2007. And if I have to talk about how much of the ecosystem we map, we have about millions of students already reading our content, which is the digital content. We have digitized the content which we have made in these 60 years, and we digitized that content, and it's available now on the platform of MBD Alchemy. That's our e-learning arm, which is digital arm. And if I have to talk about how many million users, we have about 7 million users already who are using our content or using our platform in terms of LMS or testing. In bits and pieces, they are using our digital resources. And in the time of COVID, we have given our resources, whether it's ebooks or interactive ebooks or assessment, we have given our digital content, which is animated, fully animated, or videos, we have given free for consumption for students. Well said, Anurag, that yes, the going forward is where every publisher has to invest, whether traditional or non-traditional, they have to invest in a big way into technology space. And MBD has already, and it's been already doing that in the form of, we were the first ones to bring the augmented reality to the education in India in K-12 segment. We were the first ones to do virtual reality also in this space. We've been very progressive in terms of adopting technology. So now if we talk about the way forward is, we are on the 14th of September.
But you have a problem. You're a self-funded profitable company, you don't need capital. You've been profitable for a long time. That can be a problem. Today we are talking in the backdrop of Byju's raising 500 million from silver partners, and so I'll come back to you at this point. Let me bring in Vikram. Vikram, both as an investor, what has changed after COVID? How do you approach investments now? And second, are you seeing a change in the entrepreneurs? Vikram Gupta?
Yeah.
You'll have to agree.
I think the interest is COVID has, of course, changed quite a few things. There have been quite a few changes in terms of how the consumers are now buying and their attitude towards what they want and want to buy. I think we are seeing a substantial change in that, right? So there are some very fundamental changes which have happened across different sectors. Travel, hospitality, all these areas are kind of have changed. Some of these might have changed, permanent changes as well, right? So on the other side, if you look at education, healthcare, these sectors also have seen maybe some very interesting changes, whether it is telemedicine or other areas. Of course, the area where Monika is working, I think that's seen a huge positive change. People are moving digital. Entrepreneurs, we are seeing in terms of quite substantial mindset change also in terms of moving more digital. If they were thinking of going digital, maybe at a later stage, some of them were offline primarily. They moved faster into the online world. People who are already online, I think they are more actively now using the technology to really scale up faster. And from the investor's perspective, of course, we are seeing these opportunities, and there's also an opportunity of the fact that quite a few investors who were pre-COVID quite actively issuing term sheets, and many of them have slowed down because due diligence many times requires personal interactions and people are not traveling. So that has thrown open opportunities for investors like us, where we don't necessarily have to travel when you're evaluating a technology company, and therefore many of those opportunities are coming to us at very attractive terms and conditions. So we believe that that's a very positive thing. And in fact, in the last 4 months, we've closed 2 transactions, and in the next 2 months we are closing another 2 transactions. So our investment hasn't got impacted during this time, and we believe that this is a great opportunity for investors to invest.
Thank you, Vikram, for the opening comment. Let me bring in Mr. Swarup. Mr. Swarup, you've been seeing the startup ecosystem at least for last 12 years. What has changed in the last 6 months, which will last for a long, long time?
I think to begin with, there's a lot of discussions, and we are discussing what's going to be happening post-COVID, but no one knows when is the start point of post-COVID. We are in the middle of COVID, and every day you see new concepts and new theories coming up. Like Vikram just said, that people are moving very fast towards digital. But it may happen that there could be a digital withdrawal symptoms which will occur post-COVID, right? Whenever there is an accelerated growth of any one single medium or technology, invariably post-crisis, you have seen a withdrawal system in the community. As it is, right, a lot of online education investments which are being made and the valuations which some of these online education ventures are getting, right, may be in for a shock post-COVID. There'll be a sudden withdrawal symptom in the community. Now, the concept, I think what is required here is not so much change in the entrepreneurs, but what I don't see is the change in the investors. We need to pivot our theories, right? Not necessarily we shouldn't expect the entrepreneurs to actually change. We have invested behind a certain idea, which we believe that group of founders would take it forward and give us a good return. Now, this whole concept that people are rewarding founders who have pivoted, right? but they may be the wrong guys to head that pivoted business. So I think it's a question of whether in a horse race you bet against the jockey or you bet against the horse. So no one bets against the jockey, no one bets against the founders, everyone bets against the horse. Right? So it's the idea which you are betting against. So we as a group of venture capitalists and mentors or whatever we may call ourselves should have the ability to change the founders, but not change the basic thesis of the business in which we invested. So I think that is critical. Right?
That's a common thing. For the last 20 years that I've known you, I've always seen bringing a contrarian viewpoint, and it is always deep and helpful. You're completing, I interrupted. I thought you completed.
Yeah, but you see in the larger corporate world where we have all grown, right? When there is a crisis in a company, you don't change the business model, you change the top. Right? So even Steve Jobs had to leave Apple at one point of time when the board of directors thought that he's not taking the company in the right direction. So I think in the mature corporate world, right, you change the top management team, you don't start changing the basis on your business which you have built over several years.
That's an entirely different debate. You know, which is basically about the role of a founder in the evolution of a company. At what stage he or she needs to professionalize, to what degree, how much dedication needs to happen. That's a different debate. But what you are saying is COVID has accelerated that. That's the point.
Right.
And must accelerate that. And I agree with you that the more digital grows, the more the value of human touch. You know, the more the value of meeting you face to face. Yes, all of us spending much more time on screens. We become screenagers, you know. We may not be teenagers. So let me bring in Mr. Aditya.
So there will be binge tab, like all the sorry Annurag, all the businesses which are down and under, like Monika's hospitality business, for example, right? If she's able to last out, right, that is extremely important during the COVID times, right? It's not so much of winning, but it's of keeping yourself solvent. So if you're able to keep yourself solvent, right, you are winning because you're still in the game.
Absolutely.
Right? So whoever continues to be the game will be a winner.
Absolutely. Mr.
Right?
Gupta,
So then the bench traveling, there'll be hospitality will just bounce back. Right?
Absolutely. We all are looking forward to doing dinners there, doing our get-togethers. And I have to make a confession. I did do a get-together for about 50 of my friends recently, about 10 days back. I did call Monika ji, asking her if I could do it in her hotel. But her hotel is in Noida, so it wasn't open. She owns the Radisson Noida. So, you know, and amongst other hotels. So I fully buy what you're saying. But I'm a little old. I mean, I'm much younger to you, Mrs. Swarup. You're wiser and older. But still, Vivek is the youngest. Vivek and Radhesh are the youngest of this panel. So they are the wisest. But let me bring in APG into the conversation. APG, you'd invested in 13 companies, 14 companies at last count. When I met you physically a couple of months, 7-8 months back. Tell us, what is the change in your investment philosophy? And second, are you seeing a change in the mindset of entrepreneurs, and in what direction? You'll have to unmute yourself, APG.
Yeah, is that better?
Yeah, absolutely.
Right. I think one of the basic advice that I'm giving to the people we've invested in is to really reassess your business and actually make every penny a prisoner. Very similar to what Vikram said earlier, the opportunities that are out there for investors are huge, and it is only the best of the best that investors will invest in going forward. I mean, there is a plethora of opportunities out there. So really, given the fact that you're trying to do that, my advice to my promoters is, really, button down the hatches and ensure that you make every penny a prisoner, right? Don't spend a penny on anything that is not absolutely essential for surviving or for growth. None of these fancy offices. Of course, travel is not there now. No, hiring people when it's not required. And there is in accounting a concept of zero-based budgeting. And I've told every one of them to actually take that concept and look at their business from that point of view. I think that's one. The other thing that we have to actually do, and as Mr. Swarup mentioned, we really have to understand what the oxygen of our investee companies are, right? Are they just me too, or are they providing oxygen to their users? Are they really good to have, maybe have, if have, or are they pivoting to become the oxygen of, is their product the oxygen for people who are moving forward? And unless you become the oxygen, there is no need, because you need that to survive. And therefore, what do you, Annurag, for example, need to survive? Are my promoters providing you a service or a capability through their companies that is actually making a difference to you? Or if it's not, and it's and we think it's just great to live like that, then let's pivot. Let's actually turn around and have a session and figure out, what can I do to ensure that I am absolutely essential to you going forward? I think that is fundamental to what we are saying to our investee companies, right? I think also, we've spoken about, you just spoke about hospitality. I think, if you were to just look at it, the hospitality or the travel industry represents possibly somewhere close to 15% of the global economy, 10 to 15%. Now, whether it comes back or not, I don't think it's going to come back to that same level as it was yesterday, at least not for the next 4 to 5 years. And therefore, given the fact that it has such a phenomenal impact, I think we need to actually look at those industries that have taken a huge beating because of COVID, and what are the consequences that you can, what are the consequences of these companies or these industries being impacted on your business? I think you've got to really look at that. Look at your where your revenues are coming from, what percentage is coming from what industries that are affected today that will continue to be affected tomorrow, and therefore what are your alternatives around that whole challenge that exists, right? So I think it is a type of introspection, and hopefully, the smart ones will actually survive. Those that are not so smart have already died. So, so that is the existing scenario.
Absolutely. And dare I say, I want to ask this to Vikram and Radhesh after Radhesh's opening comment, is, they also, it's your money and your, family money that you invest in, friends, the group of friends that have got together. Whereas Vikram has to raise a capital, he has to raise his fund, Radhesh has to raise his fund. So what is happening at that level? What are those guys telling Vikram and Radhesh? That's another angle I'd like to bring. But at this point, let me bring in first Radhesh Kanumary and then Vivek Tiwari. Radhesh, you've been investing in B2B startups. Tell us what has changed in the last 6 months.
Yeah, so thanks, Annurag, for having me in the panel. So we are basically a B2B focused fund. We invest in Indian B2B startups looking into the US markets, and we also invest in US startups having offices in India. We started around 2 years back, and we have made 9 investments so far. And I think for the last 6 months, I think it has been more on an accelerated pace that we have been investing in. Besides the 9, we have actually closed 2 term sheets, which likely to be closing in the next, the whole transaction will be closing in the next 1 month, I believe. And also there is a very steady and strong pipeline that is coming up. In terms of, so that's regarding the pipeline and the kind of pace of investment it is definitely increased. And in terms of the current portfolio, how they are managing, I think most of them, I think the first advice that we are given to all the portfolio companies just on the advent of COVID was that ensure that you have a runway of at least 9 to 12 months. And they have taken different measures to ensure that they have that necessary runway. And we have also helped to a large extent to see how strategize their ways of in which they can extend the runway by going out to getting new revenues as well as to downsizing their current cost of operation, stuff like that. So in a nutshell, I mean, we are more on an accelerated pace of
And
investment.
Radhesh,
I would want to say that.
has the B2B space seen an increased level of kind of activity? Because, you know, um, right now transactions in the B2B community matter a little more than earlier. So has it seen a increase in interest overall?
Yeah, so I think there are some companies which are maintained a status quo in terms of their MRR and ARR. There are certain companies which have actually gone more for increase in their revenues, and there are a couple of companies which have they're facing a headwind. To give an example, we have basically invested in a company called Dotin, and what Dotin does is that it provides users with 100 combinations of color palette, and the user has to select 10 in less than 1 minute, and based on that, his personality is assessed. And this is used by recruiters to find out what is the suitability of that particular candidate for a job, or basically to do talent management. Now, these guys have used this particular solution now to enterprises and say that now you can assess the personality of an employee, how suitable he is for working through a COVID situation, working remotely away from employees, and then take some corrective measures to see that he is in line with the working principles of the enterprises. So that these guys have seen a much better increase in their revenues, and I think a very strong tailwind they are having. The other companies in the space of customer data platform, I think all the companies right now are looking into more of engaging with the enterprises and social media through online channels. And what this company First Hive does is that they actually get all the data from different applications in an enterprise and put them inside a common repository. And once that is put, they use machine learning to see to create one single identity of that particular customer. Once a single identity of the customer is established, it allows marketers to reach out to that particular customer through the right channel, right content, and right time. So that's basically, and I think most of the enterprises would love to have this kind of solution in place now.
And Radhesh, just building on what APG said, today performance matters. Every money you spend on marketing, these kind of companies will become even more valuable as we go along. Vivek, you and me have been having conversations for a long time. Just before the lockdown, I think it was 5th or 6th Feb, and then 7th, 8th March, because he understands healthcare. I called him in Feb and I asked him, do you think this will impact India? And we had a 40-minute chat. I remember I was with my wife and kids in the car, and they kept telling me that I'm on a very long call. I must close the call. But I was asking him if COVID will come to India. That was 5th or 6th Feb. Vivek, how has your business been impacted? You are raising more capital. How's the sales been impacted? How's the supply chain been impacted? And give us a sense of that.
Sure. Thank you, Dr. Batra, and good afternoon, esteemed panelists. So we all know medical supplies, in last 6 months, the positive and massive change which has happened in this particular specialty of medical care is people are fully aware what medical supplies are. In fact, Radhesh is here on the call. 2016 IBM Smart Camp, Radhesh, you were there, and I was one of the top 8 finalists, and I had to explain people what was medical supplies, and people were asking, is it pharma, is it something, how would you manage, consumables and all of that. So that's the massive change which has happened, that there's a lot of awareness which has built into this space. People know what ventilators are, people know how to use face mask and all of that. So that's the massive change which we have seen. Overall, the global, medical supplies industry, largely, which is more to do with, with respiratory or with more of the personal protection side, has seen a massive growth. We all know what 3M has seen largely, or what companies like Philips or Draeger and all, which are manufacturing ventilators, have seen that kind of massive tailwind and massive growth in their portfolio. So overall, we have been maintaining sales. In fact, just coming back to the question, we have been maintaining sales. We have been, looking at monthly growth also. for obvious reason, because we were quite intense into our supply chain for reaching out to many hospitals. Primarily, Medikabazaar caters to all hospitals and primarily medical care all over India, like doctors, nursing homes, community care, and all of that. So we are one of the largest platforms in India and across Southeast Asia as well. So we are already connected to a lot of hospitals and medical care centers. So obviously we were seeing a good demand building up, and people were reaching out to us not just from India but also from other markets. So overall, we have been sustaining ourselves quite well, I would say that, and by God's grace, things have been falling nicely in place. Only challenge was that hospitals did not do elective surgery, so we had seen some drop in non-COVID supplies revenue, but we could make it up with COVID supplies. That's the positive impact which we saw with COVID. Supply chain was a bit disrupted initially for 2-3 months, and then from July it was much better. When lockdown got eased up and there was unlock 2.0 or 3.0 coming up, then obviously things got much better. Now it is much better as on today. This is a positive impact on the business. Overall, this entire space has been doing quite well. So we are just part of it. So we are just moving ahead with it. This is what I can tell about the business. But coming back to again, on the entire startup ecosystem, I think a lot of people have been pivoting for the short term. Many people have jumped into doing medical supplies or trying to sustain themselves. I think that might be more of a sustaining measure. But any business has, I really like what Mr. Swarup said, has to be done with better plan and should not be done just in a hasty manner. Yesterday, in fact, I could see the SpiceJet coming up with a ventilator. And I don't know whether they really understand that business of ventilators. It is not about selling, it is more about servicing. It is more about training. So ventilators, for selling ventilators, you just don't need to sell. You need to train people to use that. It's a medical device, by the way, it's tackling life, right? So whether they are actually geared up to do this kind of business model, this kind of changes, just taking over and trying to just get some, kind of revenue growth happening with this will even turn out to be more negative in future, right? When you are not able to service, when you're not able to reach out to people to train them and all. So I think the business pivoting needs to be done carefully, especially when at this time, if you are seeing a massive headwind, I think it's important to reorganize yourself. That's more important, reshuffling management and looking at sustaining measure rather than just frantically going here and there. I think that's a very important point to consider in this kind of scenario. Though we did not see personally that much, but I would rather put my thoughts to other startups in this.
What about capital raising? When you're approaching raising capital right now, what has changed? Where I know your quantum of raise is a different kind of quantum, but what has changed? Are investors more receptive to the healthcare and medical supply sector, or give us a nuanced point of view?
Sure. So I think raising capital in today's time is really difficult. People are looking at unit economics, profitability, business built on strong fundamentals, sustainability. I'll tell you, first 2 years of our business, we were bootstrapped and we were completely, EBITDA positive. We were making money in the business. For the next 2 years, we were actually seeing a massive growth in the business. And in last 4 months, actually, we have again become EBITDA positive. That's the massive impact because we did a lot of, kind of reorganization within our, kind of operations and all of that. So what investors are looking at today, I would say, is more of long-term, objectives, whether businesses can sustain themselves in this kind of volatile environment. See, this COVID was completely unforeseen. When in December, nobody could think that 2020 would become such a bad year, and people were just going on a massive spree on investment and marketing and all of that, and they're planning 2020 to be a great year for them, but they didn't never realize that this could be such a bad kind of experience for many people in the industry per se. So I think these particular factors changing, people are looking at profitability, margins, and more so sustainability as a factor.
I just wanted to hear, Vikram, I want to talk to you. You invest money, you have a portfolio of companies. When you are raising money at your fund level, what has changed? What are those organizations / individuals from you raised lot of capital. Saying to you now.
I think there are different pockets of capital where it.
Yeah, we are hearing
you.
Hearing. Yeah, I think there's a lag.
Yeah, I was saying that when we go out in the market to raise capital, there are different pockets of capital and different sources of capital. Right, on one side, there are institutional investors and there are individual HNIs, there are family offices, there are DFIs, and then there's a difference between the domestic investors versus dollar investors. And I think there have been some changes, especially on one side. Of course, Mahendra knows this, but the entire attitude towards China. There's all these dollar investors who were earlier putting their money into China. I think there have been this mindset of looking for alternative destinations to invest, and I think in that sense India has benefited to some extent and will continue to benefit. We've seen what has happened with Jio, raised $20 billion during COVID. I think that itself talks about the kind of opportunity that these large investors are seeing in India.
Let's make it 21. They raised $1 billion today also for the retail venture.
Yeah, so I think our capital so far, we've raised our capital from the domestic institutional investors. These are largest principals, government on one side. Then we have the IIT Alumni Trust with the collective pool of the alumni, the IITs and the IIMs who put money into our fund. And there we haven't, in fact, we've seen, interest actually increasing in this market. I mean, what we've seen is that when we are talking to them about a next fund, which is targeted to be a little larger fund, we are actually getting a positive response even from our existing investors who are quite excited about continuing to support our funds. Even the dollar investors, I think if you look at different the DFIs, for example, I think the DFIs are kind of open to investing even in this market, but there is a little bit of demarcation there. The risk appetite has gone down, so which means that if you're a first-time fund manager, the chances are very low that you would be able to raise funds. If you're already you have a couple of funds to do, then you have a track record to show, then your track record will speak for itself. So investors are sitting on money, they want to deploy that capital. India is a hot destination. I think this time is also separating out the men's from boys. So I think that's definitely something which we are
Monika, I want to come to you and then
witnessing.
Mr. Swarup, I have a question for you, which is a follow from Vikram's point. I'm asking you, I know you have an edutech offering that is coming up, and from whatever I saw, I know it will do well because it's based on very strong fundamentals, very good content. If I had to put it succinctly, you have the product, you have the relationships, and you have your own capital. So you really don't need anyone. You're self-sufficient. But scaling up, uber scaling up, the reason Byju's bought White Hat Junior is because biggies are getting into education. Jio will get into education. It is already in education in a big way. I can tell you Amazon is getting into education. And I can go down India's biggest corporates getting it. So to scale up, would you, I know you run business in a fundamentally strong way, made money, spent money. Would you change your mindset and raise money from outside?
Well, Annurag, yes, we are launching our app, which is Ahsoka, on the 14th of September, and it has it is very strong. It has very strong technology background on the app has, and we are working on the machine learning and artificial intelligence in it completely. And this app, which is coming out, it has got content for all grades, all classes, all boards which India has seen, all kind of languages which India has, which is the major languages spoken. And we are not looking at India only as the as our roadmap in future. We are also looking at world. In terms of, we already have content for African continent, we have content for Sri Lanka, for case in point we have in Sinhalese. So we, wherever we go, India, we have the content for their curriculum in their language. So that's our forte. And in India also, we'll be looking at because we have the bandwidth, so reaching out to about 70,000 schools each year we reach. So, and we reach to the even the last mile child, where we go to the remotest of areas. So our app is going to be at very affordable prices, because that's what we are known for. And we'll be looking at funding definitely, so to scale up to the international levels. With the national bandwidth we have in terms of our reaching out to the customer, our content, and the robust technology, that's all in place.
I understand. I buy that, knowing you, that's a given.
Yeah.
What I'm asking you is, for scaling up, would you consider, because I know you think in a certain way, but would you consider, because why has Byju's bought White Hat Junior? It's about making sure that nobody else acquires them, pays 300 million for a company, is raising money. So it's about Uber scaling up. That's also important. And APG, I always want to say that right now we're doing a lot of things by compulsion, because we can't get out of home. There is a fear. Beauty would be, as Mr. Swarup said, to see what stays and what goes.
That's
when
right.
we
will be looking at it.
do all the things that we do right now in the last 6 months, or we'll shift. The question I'm asking you, Monika, is will the mindset, has my mindset changed in terms of kind of burning money, if I have to use,
right, as Mr.
Would you consider
Mr.
that?
Vinod also said, sorry.
I said, has that, because otherwise, how do you have a great product, you have your own money, so you don't need to worry, and you have fantastic relationship built over 60 years in the education ecosystem, and you'll go both B2B, B2C. But I'm saying it may take a lot of time in the way you would do it traditionally. So has something changed in your mind in the last 6 months?
Yes, that's right. We will be going in for our first round of funding in 12 months. So we'll be looking at differently. We are not looking at the way we do our traditional business, which we're doing in books. But as Mr. Mahendra said, that yes, there is going to be a withdrawal symptom also. So this will go in positive direction for MBD, especially. So we are in the physical book side also, and we've been online education. So we have all kind of offerings in terms of services or products which the ecosystem requires. So we will be looking at funding in 12 months round. Because we need that scaling up, which we want to do, and it will not be looked at in terms of the way we do our traditional business, that we don't look at funding. Yes, we are probably, by God's grace, we have enough capital for our traditional business, but for online, for our app, we will be looking at for funding.
Okay, Mr. Swarup, I want to ask you this. There is a certain country that you built a lot of ties over the last 3 to 5 years, from where there is a lot of capital coming in. Its name starts with C. Okay, if you didn't guess. Now, what is the alternate to China? Is it possible to seclude Chinese investors from India? Is that a short-term phenomena? Is it a medium-term phenomena? Or do you think over a period of time it will become the norm, where it won't be good to get capital from China? Mr. Swarup, you'll have to unmute yourself.
I think there are different perspectives to it, right? In the short term, there are one of the things which COVID has done is polarization of thoughts in terms of political leanings and biases. Right? So, but if you see what the global scenario is today, the only economy which is growing is the Chinese economy. So, and China has always been flushed with cash. They will not invest in their own economy any longer, because they believe that the global logistics channels would get redefined. So there is no point in their investing in their own country, because they're already over-invested. The money, right? If you have seen that how money flows, if money has to get returns, it will flow in some way or the other. It may not be Chinese money, but it could be Cayman Islands money. It could be Mauritius money. It could be Singapore money. It could be Abu Dhabi money.
And said that we would do case-to-case investment. So the government will look at the source, and it is possible to track where the money has come from. So that will also possibly
beyond the point. I think beyond a point, the government will also not go beyond a certain level of scrutiny, right? Because all said and done, that you do need the Chinese money, if not Chinese money, at least Chinese technology and products. Okay. So if you see that many of the infrastructure projects in this country have come to a halt because they were all being run by Chinese equipment.
So what's your prediction? Do you think this sentiment that has been built over the last 3 months will go away in the last next 5, 6, 7, 8 months? And I had on my daily TV show yesterday an e-commerce entrepreneur who deals in phones. He says there's been a marginal impact on the sales of Chinese phones. There's still, Chinese brands, Chinese phones is not the right way because they're a lot Indian. Some have been manufactured in India, assembled. Their supply chains are very Indian, so they're very Indian in that sense. They're Chinese owned. So he said there is a marginal impact. So
I should not be letting out this maybe of confidential nature, but you have this government scheme of incentives for manufacturing cell phones in India. I was one of the early backers of Micromax and continue to be the chairman of their board. And we have applied for this incentive, but we know that 85% of the components would still continue to come from China for many, many more years to come. Right? So,
okay.
And the government is aware of that.
Okay. And let me get APG.
We were joking in the board that the only thing which we'll do is build the cartons and probably source the thermocol to pack the phones. That's about what will be Indian about the Indian phones.
That's very interesting. So, APG, what's your view on this? Of course, Mr. Swarup is a little biased, whether he agrees or not, because he has deep ties with Chinese investors. But APG, let me ask you, if a Chinese company wanted to put $1 billion in one of your portfolio company, would you take it? APG, you'll have to unmute yourself.
Sorry, I would say, is that better? Yeah. Yes. I would say we would take it in a heartbeat, only because I think everything in this world is transient. And our current relationship with China, our current sort of border issues, our current, sort of contentious nature, engagement is also temporary and transient. And I think the point is that you cannot take a country like China and put it in the, in the sort of we will not touch corner, right? There are too entrenched in the world economy for anyone to do that. We may take a short-term view, yes. We may take a view that is...
It's also election time. So on and so forth. Mr. Trump needs a bad boy. China is a bad boy. And then we have to be an American supporter. And what happened in Galvin clearly, upsets all of us as Indians. But let me ask Vikram and Radhesh, because you're two. Are you getting more investment proposals in the last 6 months or lesser investment proposals? Radhesh, first you.
Yeah, we are getting actually more investment proposals than what was last year. And just I think Vivek just brought about the point of IVM India Smart Camp. And basically, I was the first to recognize Vivek's company as one of the top 8 healthcare companies in India, and post that he got all the funding, and so rest is history. So I just wanted to bring that point as well.
Thank you, Radhesh.
Most welcome.
Thank you.
Yeah, and sorry.
Go ahead, Vikram.
I would say that the number of proposals has actually increased. In fact, there are also a set of people, and who actually were earlier in the corporate world, and are becoming entrepreneurs now. So we are seeing increased number of entrepreneurs coming from the corporate
Right,
side.
right. They have the basics in place, they have the expertise.
Correct.
Now, if they
Correct.
can do reverse mentoring, learn what people like Vivek know, then they'll
Yeah.
be successful.
Yeah. Yeah. So the number of entrepreneurs definitely increased. Of course, we are also seeing, as Mahendra was talking about earlier, I think, of course, the focus is always on the jockey, and there, there's also a increased focus on, many of these like travel companies, for example. There are almost 3,000 startups in the travel, and many of them are pivoted in the last 3 months, into different business models, right? So the entrepreneurs are great. They just caught themselves on the wrong foot, the wrong time, wrong place. But now they're into a different model. So you would continue to look for such entrepreneurs who are fundamentally good entrepreneurs, but they may have been in the wrong place, but now they found a new business model, and they're likely to do well even in those new business models.
Thank you. I want to close the panel by asking you for a quick final comment. Let me start with Vivek because he was the last one in the first round. Vivek, your quick final comment, one prediction for the future.
Sure, I will do that. But before, let me just add a couple of pointers on China. I think, with China, while everyone is speaking about it, I think I agree with Mr. Gupta that everything is transient. And what happens is, if you actually look at whether investment or kind of imports happening from China, let's classify this in most vulnerable, essential, and desirable categories, right? When you look at vulnerability, obviously, you can't allow a lot of Chinese money to come in certain sectors of our country for obvious security reasons and all that. But there are certain sectors like healthcare. Let's take an example today. 1/5 of global output production in healthcare is from China. How can you avoid it? It's very difficult because your cost of healthcare delivery is so low in our country. You can't just write off China like this. We have to live with certain facts in place. Whatever we say in our country, our production output, our manufacturing is at a very, very suboptimal level considering the global standard. So I think we have to take a conscious call on China, not writing off, Chinese money or Chinese investment in that context. We have to be sector specific, right? Government cannot allow certain investments into certain vulnerable sectors, but let's not just completely blank out China and say, no, we are against Chinese policy, Chinese money and all of that. I think that's the most important thing to consider today, because somewhat, it is not adding to a great, kind of momentum in our in our Indian manufacturing context. So we have to live with that. Now, coming back to the final comment on this, I think, we need to be building trust amongst our stakeholders. As an entrepreneur, I would say, whether it is employees, whether it is our investors, whether it is our customers, I think that's the that's the key takeaway for future. If businesses can go from north to south, can be real headwind against business. But if we have trust, like what Mr. Gupta said, that few entrepreneurs are really good entrepreneurs and they have just been falling prey to this kind of turbulent times, I think building trust is the most important factor here. And if your people believe in you, and I think you can again be a winner in coming days.
Beautiful. I would build on that, say trust and relationships matter. They're both interrelated. If you have a trust, you'll have a deep relationship which benefits both of you. Radhesh, your final comment, one prediction for the future. Quick one, short ones.
Yeah, so I'm going to see that there are quite a few new solutions which will probably come in as an habit. For example, online education, where people will be doing a mix of physical and online. Telemedicine could be another area where I think it's going to be, people will be continuing to, that habit might change in terms of how people will interact with their doctors. So with healthcare, robotics in healthcare, or whether it is doing virtual events, right? I mean, so given that we would have never imagined this kind of panel discussion pre-COVID, but all the look at the way we are actually interacting. So this could be another norm. So there could be quite a few behavioral changes, and that will probably lead to more spurt in the businesses. So that's my quick take.
Your final comment, a prediction?
I think if I was to do some crystal ball gazing, my view is that COVID, which Mahendra Swarup mentioned was probably the most used word at the moment, is not going away anywhere. I think we have to live in a paradigm where we accept that this is the new norm. And I think anybody would be foolish not to plan for at least the end of 2021, if not into 2022, to live in this paradigm. I think the smart person will actually embrace it and figure out how to do their business around it, rather than hoping it's all going to disappear.
Thank you, APG. Mr. Swarup, you have to unmute yourself. Unmute yourself. Mr. Swarup, you'll have to unmute yourself.
I think lots of entrepreneurs will be watching this panel discussion. So my advice to them is that raise money to outlast your competition. Don't raise money to outplay your competition. So as long as you are able to keep your head above water, you'll reach the sea at some point of the time if you flow with the river. Because no one knows what the post-COVID world would be, because we don't know when COVID is going to end. I was reading an article this morning itself that the last human being who will be vaccinated will be in 2025. So you can imagine that just discovering vaccine is not the end game. Getting people vaccinated is going to be a far more challenge. These logistics challenges, there are social challenges, there are ethnic challenges, there are caste, creed challenges, there are religious challenges, right? Once the vaccine gets rolled out, you will see how much polarization of thoughts will happen. That who gets vaccinated first, right? Who doesn't get vaccinated? At what price you will get the vaccination? Right?
Absolutely.
So we don't even know what we are going to be facing. So to do a crystal ball, they're saying that post-COVID, this is what's going to happen. We don't even know, right? We are not able to grapple with the COVID times. How do you predict a post-COVID situation where we don't even know what it's going to be like, right? So everyone is waiting for the vaccine to come, and then there'll be a kind of a magic wand, and all of us are going to become immune. But I don't know when I'm going to be vaccinated, right? I have no idea.
Sure.
Right? So I think it's a long haul. It's a
Raise
long
money,
haul.
outlast
Right.
your competition.
I agree with Vikram. You know that I'm in the middle of raising my own fund, right? I got my approval from SEBI on the day the lockdown was announced, right? But I have been able to do my first close just on video calls. So I think there is money sitting out there, right? If you have a right proposition, right, there are people who are willing to back any idea or any venture capital fund or any group of investors or any group of founders. So go and yeah. So I think it's a word. I think I'm so glad that the current lot of young entrepreneurs in India are experiencing this kind of a crisis so early in their lives. So when they grow up in the next 15-20 years, their businesses will be called time-tested businesses. Right? And that's a very old concept, time-tested, right? So if you're able to swim through this crisis, you are time-tested, right? You're built for life, right? And you're built to last.
Thank you so much. Fantastic viewpoint. Ms. Malhotra, your final prediction for the future.
Well, EdTech is here to stay. There are a lot of people who are reinventing and reimagining themselves. But I think the ever-evolving and affordable are here to stay for long. Because in education, anything which is done for masses is here to stay. So for long. And I think physical and digital both have a great future. Hybrid model is going to exist. So that's what I think the future holds for us. But we have to reimagine ourselves completely. It is not that only traditional way will make us survive. And when EdTech space is looking up, people are funding this space a lot. Q1 has a lot of funding coming in. I think that and also we're seeing funding coming in terms of as seed capital. So at that stage it is coming in. So I think the investors also think they're very bullish about the future of EdTech space in India, especially so. So that I think that's the way out for all our traditional publishers, that we have to heavily invest in EdTech space, and cautiously, as Mr. Gupta also said, that we need to be very cautious about it. I see a lot of other edtech players also coming into the unicorn club in near future, not only just Byju's.
Thank you so much. Vikram Gupta, final word.
I see this current time as a point of inflection. I think it took 10 years to go from 0 to 15% in terms of the online buying in the US, and it took 4 months to go from 15% to 35%. And I think very similar trends you will see even in India. I think that point of inflection is actually changing lots of things fundamental, and it's across sectors. I mean, of course, healthcare and education are seeing it in real time happening, but I think this is going to happen across all the sectors. And in certain sectors it will be much faster, in other sectors it will slightly slower, but it's bound to happen.
Thank you.
So that's where we are headed.
Thank you, Monika ji. Thank you, Vivek. Thank you, Radhesh. Thank you, APG, and thank you, Mr. Guru, for always bringing a deep and thoughtful point of view on the contrarian. It's an inflection point. Conserve cash. Never say never. Learn new skills. Be brave now. B2B means back to basics. Do that, and you should be okay. And that's what Mr. Guru said. That's the line I take away. Raise as much money that can outsource your competition. So thank you so much. Thank you for being a fantastic panel. I enjoyed moderating it, and I learned something new. I'm sure our audience will say. Thank you. God bless you. Good afternoon.